Welcome to A View from the Floor here at the New York Stock Exchange, and I am delighted to be joined by Peter Tuchman, the Einstein of Wall Street, and there is so much to talk about. Overall, the S&P 500 and Nasdaq have had a strong start to the year. What is behind this momentum?
You know what, look, I think before we need to understand we need to understand the end of last year, because that roller coaster ride from mid-November, when we literally went from that probability of an interest rate cut down to 15%, the market did not like that, obviously, and then up to 88%. We ended up getting the cut that we wanted, although in retrospect, you know, if you listen to the last Fed meeting of last year, they did say that it was a really fine line there, that between them cutting or not. There was a lot of dissension in the ranks, and look, we were trading blind for the last few months. We don't have any of the economic data that they need to make their decisions, or we need to understand what's going on, whether it's inflation, whether it's jobless, unemployment, whether it's all those things. And we still haven't gotten a lot of that information, but I guess they got enough to make the decision to cut. Whether there was a little pressure, by the president or not, I don't think that, I think although like what we saw unfold this past weekend was a whole nother story, but, I don't think he at all kowtows to the White House. He made a decision because he felt it was appropriate to cut rates. And so I think that sort of set the stage for an interest rate cutting cycle. And that now that we know that we're going to have a much more dovish Fed chairman, who is going to be, as Mr. Powell is outed or is on his way out, then, historically we know that once you're in the midst of an interest rate cutting cycle, that markets tend to be up more than, I think 16% is what it is historically of what happens there. So that's a little bit of the fuel behind the fire. Then I think people are still positioning themselves. A lot of the stocks that sort of got hit fairly hard at the end of November, I think people are trying to catch up around that. Some of those AI names through that sort of crazy, that AI bubble scenario that made no sense whatsoever. When Palantir had record earnings, it sold off because that's what markets do when there's uncertainty, and these are the highest performers of the year. And the mainstream media came up with this catastrophist story that AI is a bubble. After all that you and I have seen and talked about a million times, with the trillions of dollars going into that space, to think that it's in a bubble. Dan Ives always says that in 1995-96, which was the beginning of the internet bubble, stocks were trading at 30 times revenue. Right? They had no earnings. Now stocks are trading at 27 times earnings. So that kind of I guess that represents that these companies are making money. They are real. There is CapEx expenditure across all sectors. And so, I'm not really clear what, I think it's been a bit of a roller coaster January, to be honest. We do know that historically how January goes, so does the year, right? That is another old Wall Street adage that, that a positive January will lead to a positive year. And, I think we are up against a little bit of technical resistance against these amazing threshold numbers like Dow 50,000 and S&P 7,000. I've printed up the hats. They're available and ready, but we can't bring them out until we close above those numbers, because, I've seen it once before. I'll tell you a quick funny story. When we hit 17,999 spot 99, me and Arthur Cashin, who we just we honored on New Year's Eve here on the floor, who passed away this year, he and I used to put on the hats, and then we would celebrate these thresholds. We were sort of anxious to do it and put on the hats, and it was literally 1/100th of a point away, and we said, oh heck, let's just do it. It never ticked at 18,000. It went down 1,000. It didn't get back there for a year. So we have certain parameters that we have to hold.
I want to get back to Trump for a minute and Powell. Obviously, the feud between them has escalated with now talk of the criminal probe. Does this threaten the Fed's independence, and do you think this will rattle markets?
You know what? I think we would have seen it if it did. I think, well, obviously, as the story unravels, we'll see how more it's a reality. My fear is, as long as Powell is in the office, then there will never be a breakdown in that independence. That's got to be the way it is. That has to stand. But we know that Mr. Trump has another agenda as far as that goes, to the point where he's escalating it to subpoenas and all that kind of thing. At the end of the day, it is so important. The people who run the Fed, the governors who are involved, they're economists. They're people who are making decisions based on economic data. Mr. Trump bases his decisions on emotions and the chatter around him, who are people who may not necessarily know. At times, this year when he was pressuring him so much to cut rates, it was inappropriate to cut rates. It would have caused stagflation. It was not, when you're in a low GDP, no GDP environment, low growth or no growth environment, and you cut interest rates, you end up with this stagflation, right? Which everyone should read that story. It's fascinating, and there's no real secret ticket to get out of that. And so that's why it was so important that he held his independence, and I hope he always will. I'm fearful that whoever he puts in the job may not hold that same temperament or opinion.
Well, geopolitics also a big issue starting in 2026. Venezuela, Iran, energy risk. How should investors embrace these type of headlines?
You know what? It's hard for me. Energy is one thing I sort of shun away from because it's so, look, energy sector is controlled by 5 of the most powerful countries in the world, and we don't really know how they're going to react. I'm sure there are people who were trading against the news of Venezuela, and how do you play that? Is there going to be more oil or less oil? And then you also don't know, well, how is Saudi Arabia or Iran going to respond to this thing? And do they think that U.S. is pulling a power play? It's so complicated geopolitically, economically, commodity-wise. It's a story that's got so many components to it. It's almost hard to unravel. So for now, I'm erring on the side of caution and staying away from it because we don't know when these players are so big in the space. These are the 5 largest players in the world, and we pulled a bit of a power play here. I'm not clear what that was about. Was it an oil play, a silver play, a gold play, a political play, or something else? And how are the other players? Because you're talking Russia, Iran, Saudi, and China, and they don't mess around. And if they react in a way, they're not calling me and telling me what they're going to do in advance. So I have no edge. And when I don't have an edge, I kind of just shun away from it.
You mentioned before AI. I want to end with this. What are you seeing in AI in 2026? Is it still continuing to be a growth story, or something else has to happen?
Oh, I think it's a complete growth story. I'm here on the floor today with a gentleman named Andrew Sopko, who is building a new company called Argentum, which is a marketplace for GPUs on a secondary and tertiary level. We know that the big guys are controlling all that. We know that the data center growth and the building of it is a huge thing. We know that energy is going to be the next sector that we're going to have to address because there's going to have to be a way to fuel these things, whether it's nuclear, whether it's gas, whether it's solar. Somehow these things are going to have to be fueled, and it can't impact the regular grid, right? And so I think it's still a growth story. I think there's money to be put to work. Dan Ives, who I spend a lot of time with, who is your AI guru, says that the global demand, and we're seeing it through also this Argentum, the global demand is massive. From the big guys, from the secondary, the tertiary guys, there is so much demand across the board, to the point where this gentleman, who is Andrew Sopko, is building a marketplace where there are actually GPU entrepreneurs around the world who are producing, like they did with Bitcoin miners, small bits of GPUs for the secondary people, because we know that NVIDIA and the big players are grabbing up all the supply, and there are so many other companies that need, or sectors that need the GPU. I think it's growth. I think it's strong. I think it's here to stay.
Always a treat to hear your insight, Peter Tuchman.
Thank you so much. It's always a pleasure to be here.
And that'll do it for us here at the New York Stock Exchange. Peter Tuchman, Michelle Yu. We'll see you next time here on Asset TV.